What's up, my friend? Jan Ho, your Fit Realtor, Realty 1, Group Impact. Welcome to Chapter 11 of our common real estate term. Today's term is down payment. So what does down payment mean? Officially, a down payment means it is an initial upfront partial payment for the purchase of something expensive such as a house or a car. It is usually paid in cash equivalent and usually paid at time of closing, and then the remaining percentage of the transaction will be financed through like a loan through that lending institute. So breaking it down, what does all that means? So in the US, we offer anywhere from 0% down payment, with down payment assistance, all the way up to 20%. In between, there is like a 3.5% FHA loan down payment, or 5% conventional loan down payment, or you can go all the way up to 20% down payment or even more. Why down payment? Like what does that do for a lender? It all comes back down to how the lending system in the US work. Typically in about anywhere, that's how the lending system work. Is if you take $100 and go deposit it into a bank, into a savings account, what the bank would do is take that $100, put them in their cash reserve pool, use the cash reserve pool to borrow against the government, borrow against the Fed. Say they borrow $1,000 from the Fed, use that $1,000, lend it out to somebody else down the street, trying to do a business or trying to buy a car, for instance, and then make money off that loan and still have enough cash reserve to return to you in case you draw out your $100. So that's how the banks or the lending system work, and that's how they make money. And it is heavily regulated, so it is safe, and that's how it transfers over to a real estate transaction as well, where you put down certain amount of down payment and the rest is financed. So that down payment can be used as leverage for the lenders to lend the remaining amount to you. So that said, if you are interested to buy, say, a $200,000 home, amount of down payment you want or you need to have depends on what you want, depends on how much down payment you want to put down. If you want to put down a 5% down payment on a conventional loan, you want to have at least $10,000 in your cash account, in your savings account or your checking account, liquid cash that you can take it out and pay immediately at time of closing. And I would also recommend for you to have an additional $3,000 to $4,000 on hand to cover costs, to cover earnest money that is upfront at time of offer acceptance. For the most part, you want to cover inspection, home inspection costs, radon inspection costs. You also want to cover any other upfront costs that could come around. You also do want to cover any moving costs that would be associated with the real estate transaction. Even if you do not hire a mover, you have friends come help you move, or you have family come help you move, chances are you buy them a meal or buy them beer or pizza or whatever, that is still there is still cost that comes up during a transaction. Or even furnitures. Obviously, do not go borrow or do not go open a new new lending account before your real estate transaction close, because that could jeopardize the entire real estate transaction. But you have cash on hand, you can use that, go buy some furniture for your new home. That's totally fine. Just do not go open a new loan account. Keep that in mind. So that is what down payment is. Hope this helps you understand yet another term for real estate. Please do feel free to share or comment on this video. I would love to help I want to say 50 families or 50 friends and family in this year for their real estate needs. So sharing this video could definitely help reach them, and so I can help them out. So hope this helps you. Till next time, Realtor signing up.